Generally, the United States stays out of direct interventions in the foreign exchange market, but now President Donald Trump has made the unusual decision to help Japan strengthen its struggling currency, the yen. So why has Washington stepped in this case, and why does the value of Japan's currency matter to the US? Here's the latest. I'm Ruby Barlow, and welcome back to NewsX World. To understand this, we need to first look at what's happened to the yen. Japan's currency has been under intense pressure for months, falling to levels not seen in around 4 decades. A weaker yen means it takes more Japanese currency to buy $1. While that can make Japanese exports cheaper overseas, it also makes imports, especially energy, far more expensive. And that has become a major problem. Japan imports most of its oil and gas, and energy prices have surged following instability in the Middle East after the US-Iran conflict. As import costs have climbed, inflation has squeezed households and businesses across Japan. At the same time, Japan's interest rates remain much lower than those in the US, encouraging investors to move their money into higher-yielding dollar assets, pushing the yen even lower. Normally, Japan would try to defend its own currency by selling dollars and buying yen. In fact, Tokyo has already spent tens of billions of dollars doing exactly that, but those efforts haven't been enough to reverse the yen's slide. That's where the US does come in. In a rare move, Washington and Tokyo coordinated their intervention in currency markets. Together, they bought yen and sold other currencies, helping the Japanese currency recover sharply from its recent lows. It marks the first time in nearly 3 decades that the two countries have jointly intervened to support the yen. But this wasn't simply an act of goodwill. Analysts say the Trump administration had several strategic reasons for stepping in. One major concern was Japan's massive holdings of US government bonds. To finance repeated interventions, Japan could have been forced to sell a large amount of US treasuries, and that would risk pushing up borrowing costs in the US at a time when Washington is already managing significant debt. Supporting the yen helps reduce that pressure. There's also the broader issue of global financial stability. Japan is the world's 4th largest economy, and a disorderly collapse in the yen could trigger turbulence across international markets, particularly through so-called carry trades, where investors borrow cheap yen to invest in higher-yielding assets elsewhere. A sudden reversal of those trades could send shockwaves through financial markets worldwide. Politics may also have played a role here. Trump has described the intervention as being in the interests of the global economy, while observers point to his recent close relationship with Japanese Prime Minister Sanae Takaichi and the growing strategic alliance between the two countries on trade and security. However, economists warn that currency intervention alone cannot solve Japan's underlying problems. Unless Japan addresses issues like low interest rates, rising public debt, and weak economic growth, the yen could once again come under pressure. So while this joint intervention may have bought Japan some breathing room, the real test will be whether deeper economic reforms can restore lasting confidence in the country's currency. Stay tuned with us here on NewsX World for more updates as they come.